Real estate has become a structural allocation in most investor portfolios and is increasingly important to investor objectives. PIMCO and Allianz announced in March of 2020 that we would be combining our efforts. First question to Francois. Can you tell us more about the combined PIMCO and Allianz real estate platforms and what motivated you to combine forces?
So a few words about Allianz Real Estate. Allianz Real Estate was up to recently the captive investment management vehicle of Allianz, the Germany-based global insurance company. And over the years, Allianz Real Estate has grew to be one of the largest global real estate investor with over $80 billion of assets under management, 70% in Europe as expected, but also 20% in the US and 10% in Asia. The majority of what Allianz Real Estate does as investments for Allianz is in the core space of the market. These are the long duration, stable yields, high quality assets, which they hold over a long period of time. 50% of the portfolio is in office investments and the remaining 50% in retail, industrial, residential, student housing. So that's a short overview of what Allianz Real Estate does. Many of you are very familiar with what PIMCO does, and for many years PIMCO has been very active in the higher yield, shorter duration, more opportunistic part of the market. So you can see that by combining forces, PIMCO can now offer to its investors not just the opportunistic part of the business, but also the core part of the real estate market. That's of course an exciting opportunity. And for that purpose, it will be able to tap into Allianz's real estate large footprint across the world and open that footprint to non-Allianz investor.
Thank you, Francois. Next question to John. John, there are a number of large investment real estate firms in the industry. What distinguishes our platform's capabilities from some of our competitors?
When we think about our advantages, we think our size and our synergies across the risk spectrum, as Francois alluded to, benefits us in terms of sourcing, structuring, and underwriting. In terms of sourcing, again, we cover the risk spectrum. In terms of size, that means we're top tier in terms of your traditional sourcing with brokers. We have over 75 plus local operating partners and or borrowers, which is synergistic. We're integrated across all four quadrants. So today, when we look at opportunities, they go beyond brokers and partners. When we think about the sources of stress today, whether it's banks, levered lending platforms in the US, or CMBS, clearly there are opportunities that emanate from non-traditional sources. Just a quick example, when we think about loan sales and banks, we're a large player already in the non-performing loan space, particularly in Europe. And those deep relationships that we have across the banks at PIMCO are helpful, and not just in terms of the commercial real estate contacts. And just quickly in terms of CMBS and where we see stress coming, in some of these complicated situations, whether they're recaps, structured loan sales, legacy CMBS, they require oftentimes creative, structured solutions. Here again, we think we benefit from the broader PIMCO in terms of our analytics resources and our structured credit teams. And last but certainly not least, in terms of underwriting, as we've mentioned, with $180 billion of assets under management, that means we have the bottoms-up data that goes arguably beyond just broker data and gives us real-time intelligence on trends and a long-term perspective.